Welcome to Chit Chat Money. On this show, hosts Ryan Henderson and Brett Schafer interview industry experts and riff on the world of investing. As a quick reminder, Chit Chat Money is a CCM Media Group podcast. Ryan and Brett are also general partners at Arch Capital, and Arch Capital may have positions in the securities discussed in this podcast. Anything discussed on Chit Chat Money by Ryan or Brett or any other podcast guests is not formal advice or recommendation. Now please enjoy this episode.
Welcome into Chit Chat Money. My name is Brett Schafer, and I'm joined by my co-host, Ryan Henderson. Today is our Tuesday not-so-deep dive episode where we analyze one stock by covering its business model, ownership, financials, really everything. We're going to hit future growth opportunities, our own analysis, give you the numbers and the qualitative and the quantitative. After listening to this episode, we hope you get a better perspective on the company before making your own investment decisions. Today, we are covering Bumble to kick off our shows of online dating. We're going to hit Bumble, Grindr, Spark Networks, which is the fourth publicly traded online dating company that is extremely tiny. So that one will be interesting in its own light. And then the leader, Match Group. But first, today's episode is presented by Stratosphere, the best web-based research terminal for company-specific metrics like KPIs and segment revenues. We love Stratosphere over here at Chit Chat Money. It's very helpful for aggregating all the different KPIs we want across, any company really out there. They're building up their library over time. It saves us time and efficiency and headaches when researching companies. Ryan is showing for any of the YouTube watchers or the Spotify watchers how the platform works. Ditch Yahoo Finance and upgrade your investing home screen by using stratosphere.io. That is stratosphere.io. You can use it for free by going to check them out and tell them we sent you. All right, Ryan, let's get into Bumble. You're going to start out with a history today and then getting into how they make money.
Yeah, I'm actually going to work backwards this time. I think it's worth maybe doing this for maybe just in Bumble's case, because a lot of people know what like online dating is, so it doesn't need an explanation necessarily of the business model first. But so I'll start with kind of how the business got started. So it's really kind of focused around one individual, at least on the Bumble side, which is Whitney Wolfe Herd. She's the current CEO, which Brett will talk about. But right out of college, Whitney apparently met someone named Sean Rad. I think it was over some random dinner. She wasn't working at the time. And Rad was running an incubator in LA. And at the time, the incubator was working on I think it was this business called Cardify. It didn't end up working out that well, but he invited Whitney to basically help out with all things marketing and sales. And so after pretty much failing with the product, the Cardify product, there was this side project that they were working on called Matchbox, which apparently unrelated. They were on the same floor as Match.com. But I don't think the incubator, I'm not sure what the relationship was with IAC at this point, but they were on the same floor as Match.com. Matchbox would eventually become Tinder, and it was just this mobile-focused matching service. Really hadn't had a whole lot of traction in terms of customer adoption. So eventually, they were like, why don't we try that? Why don't we try to focus on this a little more after the Cardify system kind of failed? And Whitney's job was really to go out there. And I think this was kind of Whitney's, it wasn't necessarily her job as opposed to her idea. They're like, let me go to SMU, which was her school that she had gone to. And she was like 24 or 25 at the time. So let me go to SMU, talk to the sororities and get them on this Matchbox or Tinder. I can't remember what the name was at the time. And so she would go around to the sororities, she'd get them on, and then she'd turn around, go over to the fraternities and say, there's a whole bunch of, single women on this app. Like, you should go get onto the app. And so the guys obviously did. And it really kind of worked in sort of these hyper localized areas where it's kind of this college centric approach. The one area that it really worked was Utah. She called this out in an interview before. She was like, BYU, this is going to be a hit, because you're tend to marry younger. You kind of are supposed to have a significant other. If you're, I believe it's Mormon, you're supposed to have a significant other at kind of a younger age. And so people were using this a lot on BYU's campus. And so from there, it really kind of, once you have a whole bunch of young college people on there, it's easier to attract other people, especially once you kind of graduate up from college. But that's really where the approach started. And they saw tons of growth from this effort. And there was a lot of cool kind of marketing stuff that she would do to get people. It seemed like she was really outgoing, I would say, like kind of not afraid to kind of put herself out there and put the product in front of people. And so it worked. And however, she had a breakup, not only with the company, but one of the founders at Tinder. And so basically departed from the company. It was this really kind of tumultuous period for her. A lot of nasty things were said online, apparently, to her. She filed a sexual harassment lawsuit. And I'm not sure anything came of that, but basically she was on her own, out of work around early 2014, when a man named Andrei Andreev, I believe is how you say it, apparently reached out to her and said, hey, do you want to come work for my company as the chief marketing officer? And Andreev was actually the founder of Badoo, which at the time was one of the most popular dating apps in the world, predominantly in Europe and Latin America. And I think he saw what she was doing with Tinder and said, you want to come work for me? And she said, no, I don't want to do that. I want to build my own thing. And so initially she had this idea to build a social media where it's women only and you're just like giving each other positive affirmations. But instead, Andreev said, how about a woman-centric dating app where it's you focus on the female side of things. And he said he would fund that. And then Badoo had some success. So that's where kind of the relationship started. They were, I think, a 70%, 80% equity owner in Bumble at the time of the investment. And the model was pretty simple. She wanted women to be the first one to send a message, wanted this idea of empowering women in relationships. And I'll talk about that in a little bit. But she replicated that same model from Tinder, where she just went around to college campuses. The spiel this time was, aren't you kind of tired of potentially being harassed on these dating apps? Aren't you tired of them kind of having to make the first move? This is your chance to do that. It's women first. And so it worked this time with Bumble. However, this worked out, but it was really under kind of the Magic Lab umbrella. So from what I understand, the two companies were technically owned by a parent company called Magic Lab, which Andreev owned like 70-80% of. However, in 2019, there was a sexual assault allegation or harassment allegations on Andreev and his company himself. So that year, Blackstone bought the stake away from Andreev. And we're going to talk about the governance and ownership today. And so it's really Blackstone and Whitney Wolford. That year or a year later, they renamed the company Bumble. They made Whitney Wolford the CEO. And in February of 2021, the company went public. At some point along the way, I wasn't able to really parse through when this happened or when. I think it was in conjunction with the Blackstone transaction. They took out a big chunk of debt. And so they've got, I'll talk about that on the balance sheet as well. They've got some debt now in there also. But with the IPO, they paid down about $200 million worth of that debt from the money they raised. But to get to the business, Bumble is, as you imagine now, an online dating business with 3 different brands that operate generally independent of one another, but they say they share some of the same technical infrastructure. So if there's like safety changes made to Bumble, they can like use that use that and share it with Badoo and Fruits, which is another one that they own. And then each app runs basically this freemium model, but they all have kind of unique monetization strategies. So Bumble, that's really the majority of the business at this point. It accounts for 77% of overall revenue. And the core differentiator or value prop, as I mentioned, is that women are the primary focus. So for example, if you're heterosexual or you're straight and you make a match, women have to message first. Once that match is made, the woman has 24 hours to say something. So if the 24 hours expires, the match is done. You can pay to extend it, kind of thing, but it's generally done. Then the man in this scenario would have 24 hours to respond to the woman's comment. The app has about 2.2 million paying users now. The registered users is or the active users, they don't really give that number out, but I've seen estimates.
Not very often. It's not every quarter.
Yeah, I've seen estimates that it's anywhere. I think it was like around when they had one. It's around 10 to 15% of active users are paying. So you can probably extrapolate it out, but it ebbs and flows. And then in terms of monetization, Bumble provides a number of different both subscription and a la carte payment options for its users. So within subscriptions, you can purchase either 7-day, 30-day, or 90-day plans. It's like it's Bumble Boost or Bumble Premium. And this basically just provides, I think really one of the big benefits is that it gives you the ability to see who has liked your account. So for people that haven't been on the dating apps, the way this works is you can like somebody. They might not see it if they don't have a premium account. So people can like your account, but you might not see those until you come across them in the general feed and you both have a like. But if you pay for it, if you pay for the subscription, say you pay 7 days, you can just go ahead and see everyone who's liked your account. It's a very powerful incentive, frankly. Most people are willing to, especially if you've racked up you've been on the app for a while, you have a good chunk of likes. You want to see who's liked your account. The other functions include like extend. So I've mentioned that there's the matching period. You can extend an extra 24 hours if someone, if you really want to give them a chance to match. Rematch is another one. So if you have an old match that expired or something, you can bring that back up. There's travel mode. This is kind of important too. And it's an interesting approach as to whether or not you should make this free if you're a company or you should make it paid. But Bumble has it as a paid feature where you can change your location. So let's say you're going to New York for a weekend or something, and you want to try to meet people at a bar or meet someone at a bar, that kind of thing. You can change your location in advance if you pay and move over there and kind of try to match with people in that geography. Incognito is another one, which is your account's basically just hidden unless you've liked someone, then they can see your account. But other than that, if you don't like them, they can't see your account. And then there's a la carte transactions. So like you can super like, you can compliment someone without having to match first. Then there's Spotlight, which allows your profile to be seen by more people. Basically, there's a whole bunch of different ways to monetize and kind of pay for different things if you're a user. But then on top of that, Bumble also offers basically this core matching functionality for different verticals, I guess you could say. So, and this, people might laugh at this, but there's one called Bumble BFF, where you're just looking for platonic relationships, like friendships. And people are like, like, why do you need the dating app for it? But I've seen this done before in like, people actually use this if you move to a new city. It's mostly young females, but if you move to a new city, like you're looking for people to go out with, looking for new friends, Bumble BFF has it actually, I believe it's crossed more than millions of users. So there are a lot of people that are on there. And then there's Bumble Biz, which is like kind of, I think it's meant to be sort of a swipe feature version of like LinkedIn almost. Like you're basically trying to find business partners. So that's overall Bumble. Ultimately, the major driver for the business here is paying for extra features. to basically get people to see who likes you and make greater visibility on the dating apps. The other one is Badoo. This was, as I mentioned, one of the largest dating apps globally. It was predominantly well known across Europe and Latin America. It appears to be shrinking in relevance, but Badoo they monetize really similar to Bumble. So they have the 2 subscriptions where you can basically just get a bunch of the same features. As for paying users, Badoo has roughly 1.2 million paying users. I think they have a lot more free users and so their paying conversion is a lot lower than typical dating apps, but it's still usually in the top 4 or 5 downloads when I looked across a lot of the European markets. It's just kind of declining relative to Bumble is one that's beating them out, and then Hinge and Tinder, and in certain markets there's more niche ones as well. And then the last one is Fruits. So Fruits is kind of this unique concept, I guess you could say. It's really popular in France. And so, and I guess it's worth saying Bumble acquired Fruits, I think for like 70 million a year ago now. And the idea is that users are required you set up your account and then you're required to select either a cherry, a grape, a watermelon, or a peach, which each indicates what your dating intentions are. So whether you want like a serious relationship or something casual, that kind of thing. Doesn't really have any financial contribution to the business yet, but it remains to be seen if it will. It's really kind of only popular in France right now, but if they expand it out, I think it'll be potentially a better concept or a bigger concept. Here's a quote from Whitney Wolf. Her last thing I'll say, when asked about Fruits, she said, "We bought Fruits because we've looked at over 90 dating businesses and the majority of them are inorganic growth. So they're propped up on spend and, they're not really network effect businesses. Fruits was very organic. It was in the zeitgeist. Gen Z loves this product in France, and they're definitely one of the most talented teams I've met in the space." So positive comments there. Sounds like it was more of, instead of just a whole bunch of marketing, they actually had this concept that people were fans of.
Yeah, it seems interesting. We'll talk more about our opinions on these apps later, more anecdotes, more personal perspectives on their growth trajectories. But next up, we have industry and competition. Pretty easy to look here. If you take a look at some of the third-party estimates online, they vary widely, and it's kind of shocking that all the numbers are so bad because you can just add up the revenue numbers for the 3 big dating players, which gets you to global spend of around $4.3 billion a year. For reference, Match Group is making up the vast majority of that at over $3 billion a year. Of course, there are going to be some other players out there, specifically the one that I see in the grossing charts is Raya. And then there are some obviously offline stuff as well, or not, digital dating apps. So maybe we round up the online dating industries to about $5 billion in spend a year. I think an interesting discussion question is, how much larger is this number 10 years from now? And does it make sense that $5 billion are spent a year on these products? And could it be much higher than that in the future?
Yeah. 5 billion certainly seems achievable. And I think there's a number of ways to get there.
That's what it is right now.
Oh, yeah. I mean, I think there's, for one, the number of online daters is growing. I think a lot of people have seen that chart of like how people meet, at least in the US, and online is becoming the most prevalent way to meet. But also internationally, there's a lot of areas where there's still a stigma around online dating. I think as that stigma kind of comes down, that's automatic payer growth, but also this is a really valuable service. So I think there's a lot of room for pretty much everyone across the board to increase the revenue per paying user that they get, which is, Bumble does a good job of it, but I think there'll be payer growth and average revenue per payer growth in total across the board. So yeah, I suspect this will be a much larger industry in 5 to 10 years.
Yeah, the way I think about it is there are people out there that used to go, well, still do, kind of the same amount, go to a bar or restaurant or wherever, or a music festival or any place where you can meet significant others or potential significant others, and they'll spend hundreds of dollars, so over $100 on drinks for one night. And the way I think about it is you could do that, or you could spend $25 today, probably $50 in 2030 to actually get dates through these apps. So yeah, but we'll talk about more anecdotes later. The competition is very easy to understand. You have the players that we're going to talk about throughout this monthly theme. You have Match Group, who owns Tinder and Hinge, and then Grindr. Grindr is, for anyone that doesn't know, the LGBTQ, the app for basically everyone that's, and I guess we haven't covered them in close detail yet. We're going to do that next week, but it's basically for a lot of people that aren't heterosexual or aren't, just in that regard. So we'll cover them later. So they're not technically that big of a competitor to Bumble or Tinder or Hinge, although Tinder, Bumble, and Hinge obviously do not exclude those people on their apps. And then that's really it. You have those kind of big four competitors. There's a lot of smaller players out there. You can include someone like Raya, who's on the top of the grossing charts as well. But Raya, for anyone that doesn't know, is really it's a very invite only for like celebrities or people with 1 million Instagram followers, that sort of thing. So you're not really competing with the
and you have to
daters
pay.
on. Yeah. And you really can't go on there unless you get invited. So it's not competing with the people on Bumble, Tinder, or Hinge. It's those big three are competing right now. And then I guess Badoo as well for Bumble. So yeah, that's really it. Very simple. Let's hit management and ownership though. This is where it gets interesting. Ryan, you have something to add here.
There's something, we talked about this a little bit. Maybe we can talk about this more in anecdotal evidence, but we're going to talk about the network effect here, which is,
why don't we save that for,
because it's maybe a testament to like the industry growth and answering your question, which is, the more people that are on these services, like, the more valuable the services are. So you want to get on. And so that kind of creates a lot of user growth. But I'm starting to see now in personal life where, because this is an option and because so many people are on here, it's becoming much more difficult to find dates, create relationships in person, that it's almost like the remaining pie has to get on the apps as opposed to
or not
wanting
or never have a romantic relationship. Yeah. Well, we know all that too well.
And maybe that's maybe just like the more mature markets, but I think that will probably add to user growth over time as well.
Yeah, and we'll talk about the bar analogies and stuff like that later. But yeah, let's get management and ownership. Bumble has some interesting management and ownership quirks. I guess interesting is a good word for it that I'll address in this section. And as an aside, I want to be clear that none of it has to do with the founder or CEO being a woman. I would be saying the exact same things if it was a man. The founder is Whitney Wolfe Herd, like Ryan mentioned, started the company after leaving Tinder around 10 years ago, and she is only 33 years old. So she started this when she was extremely young. If we look at executive compensation, no, the size was not a huge concern for me. I'd watch out for periodic equity grants, though. They did grant a big one in 2021. That might have been because of the IPO, but they didn't do much in 2022. But when we look at their annual bonuses, the targets are based on an equal mix, so 25% each of revenue growth, adjusted EBITDA growth, MAU targets, and culture, which I don't think any of these are good for Bumble. I think revenue can be fine, or like an ARR number can be fine for a subscription business. But for this type of business, you should be targeting just earnings growth, really. I mean, that's the key thing here. MAUs technically don't matter if you don't monetize any of them, because you can pay for marketing to get a quote monthly active user, right? And then you're just wasting marketing spend, but we'll get to that later. And then after doing the private equity deal with Bumble a few years ago, Blackstone still owns a large stake in this business. We'll have the ownership table within the newsletter, which I think can kind of show everything here in better detail, because I'm not going to go through everything on the audio or video portion here. But from a voting perspective, I think the only important thing here is that both Blackstone and Whitney Wolfe Herd have a tight grip on the voting power through these separate stock units, which for all intents and purposes, we can just call Class B shares. And they own combined 90% plus voting power. So they control this business. There are also, when I was going through the proxy statement, a few things that concern me, and none of them are giant red flags. Well, one of them is, but they all add up to a bit of a red flag to me. So first, there's full control here by Blackstone and Herd through the Class B units. They can screw outside shareholders, and there's really nothing we can do here. That's the one red flag I had, is the Blackstone has full control. Second, I saw that Whitney Wolfe Herd gets childcare benefits and full-time security paid for by the company when she is worth hundreds of millions of dollars. In my opinion, I think this shows a lack of frugality and integrity. Third, Herd, like I mentioned, is only 33 years old. This is a small one, but generally I get nervous when a founder or CEO is less than 40 years old. It can lead to, as we all know, immaturity. But it's as someone who's run this for 10 years now, it's probably less of a concern than someone maybe that started it a couple of years ago. Fourth one, and this is one that's going to get confusing, but I think the most important thing is that the company is going to be paying the Class B shareholders money. There's a clause talked about in the proxy and annual report that states that Bumble, the holding company that you are buying as an individual buying the Class A common stock, is going to be forced to pay 85% of the tax incentives earned by the company back to Blackstone and Whitney Wolfe Herd and the other Class B shareholders. While this was purposefully written to be extremely confusing, and it's possible I'm missing something here, I tried to read it 5 times and I cannot get full clarity. This deal looks quite selfish, and it represents the self-dealing that I'm concerned about. And if we look at a quick look at the 10K, it shows, I actually wrote 270, but it's 370. There's $369 million in deferred tax assets at the end of 2022 that they will be paying the majority of to these Class B units. And if anyone's interested in the newsletter, I put a quote from the proxy statement that describes partially how this stuff works. And I would recommend trying to read that and not getting your brain in a pretzel, because if you can understand this, your IQ has got to be like 200. And then fifth here, a few years ago, Herd took out a loan from the company. I think in a vacuum, it's actually benefited the business because Herd paid back them in interest. But it feels a bit icky to me. It feels a bit risky to me. It wasn't the best look from my view when evaluating this management team. And then in a similar vein, for the voting control stuff, I worry, given their stock price, that Blackstone might want to take under Bumble. I mean, my thinking is, why wouldn't they at these prices? Who's going to object? And who can object? Nobody can object. And if Herd agrees, the founder CEO, and she can still maintain an ownership position, well, they might be able to screw over shoulders, especially say if we buy today and the stock drops another 50%.
You see
anything to add there, Ryan?
Yeah. Did you see the recent stock sale? You see any news about that? I couldn't tell whether that was dilutive or not.
I actually did not check that out, but that's because it's not.
I'm pretty sure. I think Wolfe Herd sold a big chunk of her stake. Let me double check that. But
that was really recent. But yeah, why don't you go into earnings?
Sure. I mean, the business as a whole, they just wrapped up 2022, so this always makes earnings coverage a little easier for me because I can just do annual figures. Basically $900 million in annual revenue. It's growing 19% year over year. 72% gross margins. The biggest payout here is payouts to the App Store fees for every transaction. That's where their cost of revenue comes from. And then negative 114 million in net income. So they are GAAP unprofitable. However, I'll talk about why that is. They do have $133 million in operating cash flow. The two big discrepancies there, or what's making up the differential, is one, they do pay out a lot of stock-based compensation, which is more a structural issue. So $111 million in stock-based compensation. So if you just did operating cash flow minus the SBC, they're basically break even profitability wise, but there was also a $145 million impairment charge to Badoo. Management on the conference call basically said this is because they're exiting the Russia and Ukraine businesses, and they had a decent sized presence there. I think they actually had a decent amount of employees there as well. So a big impairment charge, at least relative to their Bumble's earnings. However, my concern, I guess, is that the Russia and Ukraine exit isn't painting the whole story, and that maybe there's some actual struggles at Badoo beyond just exiting those businesses in terms of like attracting users.
It's also a nice
overall,
way to get those tax incentives up, I'd say.
yeah, that's true. Overall, 3.2 million paying users across all the services. Most of those are Bumble. Bumble is growing its paying users at 34% relative to last year. Badoo is decreasing theirs by 11%. So really, it's kind of a good company, bad company situation here. At least that's what it looks like for the 2022 fiscal year. And then the total average revenue per paying user is $23.03. It's growing, or it grew this year, but the average revenue per paying user at Bumble is much higher, and it's much lower at Badoo. So you're getting roughly $29 in average revenue per paying user each month on the Bumble service. So, which is, I believe that's like best in class relative to peers.
Hinge is better, but yeah.
I thought Hinge is right around 25 right now.
I'll confirm while you're gone.
But it's people are willing to pay for the service, and there it's worth noting that there's sort of the international mix matters there as well. So as Bumble kind of, Tinder, for example, is in a lot of international markets where the propensity to pay is probably lower. So you're going to get a lower average revenue per paying user in those cases, which Bumble's expanding internationally as well. You could expect average revenue per paying user to kind of come down because of that market shift. But if they raise prices, maybe it offsets it somewhat as well. Talking through the balance sheet, they have $403 million in cash equivalents. They generate more than $100 million in annual operating cash flow. But liability side, they've got over $600 million in total debt. All of it's long term, but it's all one variable rate 2027 term loan. And the interest expense as a percentage of overall debt was about 4%. So to kind of offset the variable rate risk, they have this, and maybe this is one of the benefits of potentially Blackstone being an owner, is they really know how to, they're good when it comes to cap structures. They have a large book of interest rate swaps. During the year, they booked a $10.5 million increase in net gains on their interest rate swaps. So this offset about half of their interest expense. So it does kind of mitigate some of the variable rate concerns. However, all else equal, or I get maybe not all else equal, for every 1% increase in rates, even taking into account the interest rate swaps, they estimate it's an additional $2.8 million in annual interest expenses. So interest expense will go up in this variable rate or in a higher rate environment. Basically, net debt, they've got $225 million in net debt. So net debt position, $133 million in annual operating cash flow, and the business continues to grow. My concern here is that they don't care. The debt holders or the lenders don't care how much you put into stock-based compensation because you're paying them back in cash. So, if you have $150 million in operating cash flow and you boost your stock-based compensation, that you're still freeing up money to pay back your lenders, but it's at the expense of shareholders. However, they haven't seemed to do that so far. Stock-based compensation actually came down year over year. I imagine part of that's because of their exit of the Russia business, which had, I think it was like 100 plus employees in Russia.
Also comp in the IPO.
Oh, that's true. Yeah, that too. But I would just keep an eye on that, given that they're going to have to pay this debt down over the next, well, it's really not due until 2027, but they're going to have to pay it down. You don't want them doing that at the expense of minority shareholders.
Yep. Don't look at adjusted EBITDA either. And then on the Hinge, yes, you're right. $25 revenue per payer. But if Hinge continues on its growth in revenue per payer, they'll pass Bumble this year or become equal or pass them, kind of depending this year. So yeah, both Bumble. We'll talk about that on the Match Group one. But let me hit valuation. Pretty simple one. Market cap, I have it at 3 point. Oh, wow, the market's down. Well, the newsletter is going to be different because their stock's kind of down a lot today, but it's 3.8 billion. And then I put the enterprise value at 4.4 billion if you include the tax liabilities that Blackstone and Herd are going to get as a part of the net. If I include that in the net debt, even though it's not technically debt, it is a liability that you the common stockholder are going to be paying back to them generally. And then I have a few different metrics here that I think are relevant. We have EV to gross profit, 6.7. EV to operating income is negative. Not too relevant, but something to track over time. And then EV to free cash flow, I have at 38. So pretty expensive given that cash flow number with a lot of SBC. However, they are still expanding that free cash flow margin. And if you kind of look at Match Group's numbers, you can expect that free cash flow margin to continue to expand. And then another one I think is important is looking at specifically the enterprise value to Bumble app revenues, and that is 6.4. So pretty expensive on that regard as well, but not overly expensive, even if you exclude all of Badoo. Okay, anecdotal evidence. This one will be fun. Ryan, what do you think?
Yeah, no longer, I guess this is a humble brag, no longer on the dating app lifestyle, but
hopefully permanently, right?
Hopefully, yeah. But this is certainly one of the big three brands of the US. I was a user of basically the way I did it. And I think a lot of people probably do this. I just had, at the start, I had just like an online dating folder in my phone. And I just had Tinder, Bumble, Hinge. Eventually ended up just going only to Hinge. I think generally as you age, like past the college, years, you're probably more focused on like the Bumble Hinge side of things.
And some are better for others, right? Yeah, and some are better for others. It's kind of individual, right?
Right. But yeah, to be honest, the whole like women centric, basically a lot of the spiel is that like they've completely inverted the dating realm by like putting the power in the like in the hands of the women. Like the services aren't that different, to be honest. In terms of like dynamics, a lot of it, like the woman having to message first, like a lot of the times it's like they'll send like a space or a hey. They
send two things to me. They send hey with like 4 E's and then, or the emoji that has the hand wave. So really it's not changing anything.
It's better
for safety though. It's better for safety, but it's not really from a financial perspective. Doesn't change much.
100%. Yeah. So I don't think there's that much differentiation, at least in the US, between Tinder and Bumble. Hinge is kind of a different, I would say Bumble kind of sits in terms of user experience, it kind of sits, or maybe user demographics, it sits between Hinge and Tinder.
Yep.
That's at least the way in the what it's like in the US. I'm curious on your experience in Chile, if you don't mind sharing.
Yeah, both Bumble and Tinder are good, but Hinge isn't here. I mean, there's like usually there's no one on it. I checked, and yeah, both of them work fairly well. So yeah, but I personally find the Bumble is a little bit, I feel like and maybe this works from a monetization perspective, but they don't have as good of tactics for keeping people coming back to the app because they make you wait a really long time before you can have more swipes. They don't give you as many swipes. And it's just, if you kind of get what I mean there, where Tinder, on the other hand, while they've had their issues, we'll talk about on the Match Group episode, they're much better at getting people back to the application to, get that liquidity up. Okay. My anecdotal evidence, yeah, same thing. Bumble app is good. It's kind of one of the big three apps around the world. And as we'll talk about on the Match Group episode, Hinge is kind of going to replace Badoo. And it's not a guarantee, but it's almost set in stone. I don't want to sound too confident, but the numbers look like it's going to happen. In
looking at the downloads or the Sensor Tower data, a lot of the times in the areas where Hinge has officially launched, it's replaced Badoo either as the second or third app. And then even in the areas where it hasn't officially launched, it's like playing fourth relative to Badoo because people are downloading it already in anticipation of the launch, or they're downloading it in not their native language, or pretending to locate somewhere else.
Yeah, halo effects in Europe and stuff like that. Yeah, and here's another piece of anecdotal evidence that a friend talked about with us, an investing friend. When comparing, if you kind of compare dating apps to bars in your town, there's three or four. There's usually probably, well, depending on the size, but there's more than 3 or 4 bars. But there's usually 3 or 4 bars that people go to regularly. There's not one, but there's probably 3 or 4. And that's why people use multiple dating apps consistently, because you want this mix of things. And if you can become one of the 3 or 4 clear bars that people go to on a regular basis, you have a competitive advantage, especially if it's one for people that are looking for romantic relationships. So that's how I would think about the dating apps. But yeah, and generally I have the same thing here. I worry just anecdotally about Badoo really hemorrhaging users as both Bumble and Hinge move internationally and kind of take those 3, 4 bars. And then I also worry, as Hinge is moving internationally, that they can slow down or compete with some of the greenfield opportunities that Bumble seems to be taking quite easily right now. But let's move to future growth opportunities. Ryan, what do you think here?
Yeah, I mean, I think he probably took the only kind of non-expected one, but it's hard to like come up with anything new because the formula for growth in online dating is pretty simple. Like you launch in new markets, you advertise some, you try to like hyper localize, get people on the app. Bumble does a really good job of that. And then the network effect kind of takes care of the rest, especially if you have like good brand awareness like Bumble, where you're already popular in a lot of European markets. Launching into the next European market's pretty easy. The network effect really kind of takes care of everything. So beyond that, I don't. That's the simple model. That's what's going to drive growth for the business. But I would not be against, if I were a shareholder, I would not be against making some of these acquisitions of smaller players. And so
let's get Raya here. That's got to be a good business.
Yeah,
I don't know if they're. I'm sure they've all made acquisition talks to them, but they're probably not selling.
Yeah, and you got like, it's basically someone asked Whitney Wolf Herd on this. I think it was at the Morgan Stanley conference for tech and media or something, and basically said like, "Are you trying to be a branded house or a house of brands? Like, are you trying to be, like let Bumble grow organically, or do you want to become sort of a Match Group like situation?" And she said they are not trying to be a house of brands. But in my opinion, like you've got the marketing chops as Bumble, you've got the resources to scale niche concepts. Why not take some of these really unique concepts that have done well in like fruits in very particular markets? And if you see the application to go kind of wide with it, like you've got the resources to do it, I would say go for it, and at least obviously do it responsibly. Don't just start acquiring everything. But I like that approach. You can pay a premium when you have the marketing know-how and the scale or the resources to scale something like this, because that's the thing prohibiting a lot of these smaller businesses from growing.
Yeah, I do worry that I'll talk about it in my section because I'm going to have fruits here, but I do worry that they haven't shown a track record of doing that. So we'll TBD, and it's better if you can kind of be diversified and not betting on just Bumble, the Bumble app, because there are threats out there, specifically as Hinge rolls internationally. It's TBD who's going to really, what percent of the market is going to go to Hinge versus Bumble, and they're probably both going to win. But again, betting on that one horse is a little bit tougher. But my future growth opportunity is going to be Fruits acquisition deal with $70 million. There might be some contingent payout clauses, but didn't really look at that for this episode. Like Ryan mentioned, popular dating app in France with the innovative way to talk about your intentions of or what you're looking for, but classify yourself as a fruit. It's currently, just for reference, 5th top grossing grossing app on the French App Store under the lifestyle category, and Tinder is 1, Bumble is 2. Do you think they can scale the Fruits app across more countries? Because that seems to be their intention here. Is there room? Because I feel like the setting your intention stuff, all the apps have now copied what Fruits kind of innovated on, obviously without the fruit part.
Yeah, that is an interesting idea. And maybe that's a testament to like the moat of the bigger brands that you can just copy functionality. Like it's like what Facebook has basically done to every other business, where okay, you launch stories, we'll launch stories. You launch short form video, we'll launch short form video. And it's like everything's kind of copyable in this industry. So maybe you're right. Maybe it's really hard to scale some of those smaller concepts.
Yeah. I'd be worried about it, but who knows if they can succeed on bringing this concept internationally, maybe there's room for a fourth player for the younger generations. And that could be very, no pun intended, fruitful. No pun very intended, but let's go to highlights and lowlights. Ryan, what do you dislike about this one?
I like that basically they've done a better job monetizing than peers. They provide a lot of different payment options and different, if I haven't been on the apps in a while, but if I remember correctly, they have different duration plans than Tinder.
Yeah.
Like
And
more
Tinder
variety.
Yeah. They should have done that a long time ago.
If you're a,
well, just think about a vacation. Yeah. Right.
Yeah. If you're one of these apps, like you should roll out as many payment options as possible.
Think about spring break in Cabo, spring break in Florida, wherever else everyone goes, right? Spring break in Cancun. 3, you get a weekend there or a week. You have it at 50% of the price of the monthly, and you're going to get way more. We don't need to do a study on that. It's going to work.
No. And a lot of these
drives and the more important thing is it drives liquidity, because the more people are swiping or making the likes or whatever, the better the more the network effect is solidified.
Yeah, I mean, the other part is a lot of these are impulse buys, like people that are making purchases on this platform. It's not necessarily like a well thought out decision. So
really, you're not thinking with your brain. Sometimes.
Give people the option to do something where it's like, I'm sure there's a lot of people that have bought a monthly pass and then deleted the app in like a week. So it's like, give them a lot more of these a la carte things, which I think Bumble's done a really good job rolling that stuff out. They generate best in class average revenue per paying user. I mean, you think about the different demographics that Bumble is targeting versus Hinge. It's very surprising that they have a higher average revenue per paying user than Hinge, because Hinge targets more affluent, higher propensity to spend customers.
Yeah. When we do match group, though, I'm going to make sure we look at the definitions of average revenue per pair, because there could be something that's causing that to happen. So we'll have to look at the definition of how they're calculating it. I looked
at Bumble's and it seems fairly common. I'm
sure it's rational, but we got to make sure it's the same, because then it might not be apples to apples.
Second one, they've got a proven track record of growth, plus there's operating leverage here. So Bumble's proven it can successfully enter new markets. At this point, the network effect kind of takes care of itself. The brand is well known. You can, and essentially when the brand's well known, people download the app without having to be told to do so, which is just low cost acquisitions, which means better margins at scale. I could see this having very Tinder-like margins at some point, which is north of 30%. Yeah, I mean, that's like the most attractive part of this business is the network effect and the potential operating leverage. Third one for me is the industry tailwind. This benefits a lot of the players in the industry, but we've all seen the chart, probably seen real life examples, but online dating in general is growing across the globe.
Ignore those clickbait pieces that come out once a month. It is not true. For anyone that's married or whatever, it is not true.
The last one, upside, if the app store fees come down anyway. I'll maybe talk about one of the bear cases that people cite all the time, which is like, if you do a good job, your users will leave you. Yeah, I mean, that is true, but payers have continued to rise. The amount of people paying for this service has continued to rise, and the value of the service that people are willing to pay for continues to rise as well. So that offsets any. And also, like, I think the U.S. some reports show that like 75% of millennials and Gen Z report being lonely. So there's plenty of a pool for potential customers. It just doesn't seem like that bear case has played out over the last 10 years.
And just think about it. In what world is the entire single market? Like everyone's going to be single? Or not, excuse me, everyone that's single is not going to be single. It's just it filters through. The percentage of people that are single might change slightly but it's not going to go to zero. I mean, what are you talking about? That makes no sense to me.
I mean, don't expect an enterprise SaaS lock-in, but basically, if you're a big brand in here, you don't have to do anything to acquire these users anymore. Really, you can just
and they're already downloaded on the app. Your profile is probably you hide it or whatever, but it's there for you to start up again if or when you cycle through again.
Yeah, I mean, the word of mouth marketing here is insane. Like, it really is one of those things that's like becomes, as Whitney will heard, part of the zeitgeist. People talk about it all the time in personal, like in general conversations. Lowlights for me though, the governance. You talked about this. I think we're going to have there's two obvious lowlights here, which is the governance on top of the weird complexity, which makes it feel like they're not really focused on minority shareholders. I don't know about Whitney Wolf Herd's ability to like allocate capital successfully beyond what they've done with Bumble,
or just rationally. Like, seems like someone who might be going for big over free cash flow. Sure. Yep.
No doubt, she's an exceptional marketer. If you go and listen to her interview on How I Built This, you can instantly tell like some of these ideas were just like she's very. She's got a lot of creativity in how to build these brands, but a great marketer isn't necessarily the perfect CEO in terms of generating increasing free cash flow for shareholders. So that's maybe one of my concerns. Maybe over time she can prove it, but so far there's not a whole lot of proof. She's only been the CEO for 3 or 4 years. Badoo just seems to be declining in relevance. Some of the numbers are attributable to the Russia-Ukraine exit, but also it looks like most of the markets where Hinge has launched, they're quickly replacing Badoo on the top grossing charts. So that would be a concern for me is expecting that business to continue to decline.
Yep. All right. My highlights, do it quick because I have similar ones here. Yeah. The payer growth at Bumble's been steady. I shared that chart for the video watchers where Bumble's paying users have grown at a compound annual growth rate of 37% over the last 4 years, which is really impressive. Second, unit economics for the dating apps are strong. They have 70% gross margins, even with the high fees paid to mobile app stores. And third, the network effects, where I think they have long-term competitive advantages before this if they are nurtured correctly. We talked about Badoo not being nurtured correctly. We'll talk about on Match Group how Tinder kind of dropped the ball for a few years and is still doing fine, but has seen some cracks that they're trying to cover up, or not cover up, but fix. And the key here is that each person that joins Bumble makes the platform that much more valuable for everyone else in that geographical area. And the bigger the city, the more valuable it can be. There's a reason I use Tinder or Bumble no matter where I am in the world, and not some third-rate app ranked 50th on the lifestyle category on iOS. I mean, it's just not going to happen. You're not going to have the same outcome for the same price, or even if you're not paying at all. Lowlights are the exact same as yours. So let's move to bull case. Ryan, what are your what do you outline here? What could go right?
Yeah, I'll just walk through some of the numbers to paint a picture for people that are trying to look at the financial situation. My two assumptions here are basically Bumble continues to grow and Badoo slowly declines, but they run it for cash. So this is a 4-year projection. Over the next 4 years, if Bumble grows revenue at 15% annually, which I know that sounds optimistic, they are growing faster than that right now. They're guiding for faster growth than that. But also, I just think it's doable for a business of this quality to continue to grow because, one, they have the overall industry tailwind, but they have the brand to constantly be in the top 2, top 3 apps. There's really durable growth once you're at the top in this industry. If you look at Tinder over the last 7 years, you can see that. And then my other assumption is that they have 30% operating margins at maturity. I wouldn't be surprised if they have close to that now. Can't tell with the SBC added back, but and they don't break it out, but I would assume that at maturity, this is more than a 30% operating margin business. If those two things work out, they'll be generating $364 million in operating income in 2026. Now, on the Badoo side, if Badoo's revenue shrinks by 2% each year, which I think is, given the outsized losses from Ukraine and Russia exit this year, maybe it's a smaller shrinking base. That's, I think, reasonable, maybe even optimistic. And then they also generate 15% operating margins. Like I said, they run it for cash. It would be 30 million in annual operating income. So really, most of this business is all Bumble at that point. Together, they'd be doing about 400 million in annual operating income. You value that at 17 times, which I think is also maybe fair to optimistic. This is the bull case. You've got about a $6.8 billion market cap. That's roughly 70% higher than current prices. Plus, you get the upside of fruit. So 70% higher over 3 or 4 years.
SBC is going to knock that down to about 40%, though, given what isn't baked in. But yeah, maybe you could just assume that all cash flows as I guess
buyback.
Yeah, that's true. You haven't taken into account those cash flows. Yeah,
but yeah, I just basically, if Badoo stabilizes and Bumble continues on its trajectory, and they are rational around costs, they're going to make this will be a good investment. And then there's kind of a call option in fruits if that ends up being anything in other markets beyond France.
Yeah. All right. Mine is going to be, if you look at today's price, we got an EV to gross profit of about 7, and that is including the tax liabilities. If Bumble can reach, and I'm saying consolidated here, about 30% operating margins like Match Group, as Ryan mentioned, and I would say for reference, Tinder reportedly has operating margins of 50%. However, I'll put this in the newsletter. Well, I have a chart of their S&M spend as a percentage of gross profit, and Bumble as a consolidated company has hovered around 40%. But if you look at Match Group as a whole, it was at 24% in 2022. So Match Group is much, much more efficient. So when you look at that Tinder operating margin, I don't think Bumble's ever going to get there unless we get App Store fee compression. But if you put 30% operating margins on the current multiple of revenue to operating, on the current EV, and then with that operating income, that would be 17 times. That's last year's revenue and last year's, say, estimated operating income at 30% margins. Even if they have, interest payment headwinds, a lot of share dilution, which I would look up yourself, it's coming. The stock will likely do well over the next 5 years if Bumble can grow its revenue at 15% a year. I'm saying the Bumble as a consolidated basis. But let's go to bear case. Ryan, what do you think?
Well, I think at this point, investors mostly only care about the Bumble specific brand. Like Badoo, you could X to 0 and the valuation probably wouldn't change that much. I mean, it would, but like what this thing's worth in 5 to 10 years is based on Bumble. So if it's pretty simple. If Bumble's user growth begins to slow, investors would get hurt. It's hard to see why that would happen, but you could have said the same thing for Badoo 3 or 4, 5 years ago.
It's a little longer than that, but yeah, it's been stagnating for a while. But
really,
yeah.
I mean, it's
been it's been stagnant for 5 years.
Yeah, it's hard to see what would come that would replace Bumble, but I mean, I think it's always possible that it's really hard to climb, kind of the wall of success in online dating at this point, because people want to go to the apps where there's already so many people and everything's so copyable, like any unique features. So I don't know. I mean, it's really tough to replace, I think, the top 3, but it's been done before. Badoo was one of the top ones for a while, but that would be the big thing. Or cash just never gets returned to shareholders, or there's anything that happens that's like self-serving. Yeah,
well, that SBC is rough. And yeah, my bear case is going to be Blackstone. Look, I'm not going to invest in a company where I'm the minority shareholder to Blackstone with no control. It's just never going to happen. So that's it. All right, more or less interested, Ryan.
Well, I want to look into this, I guess, recent stock sale. If Blackstone starts to relinquish shares to the public, I'd certainly be more interested. Yeah. I don't necessarily feel that great about Whitney Wolford as the primary capital allocator. great marketer, no doubt about it. But if she proves out, like maybe with this Fruits acquisition, if she proves that this can like really scale across different markets, that would give me better sense of who she is as a capital allocator. But like I'm certainly interested in the Bumble brand. There's just some governance stuff that keeps me away.
Yep, I'm in the same boat. If Blackstone's gone and at the right price, I'm in. Yeah. All right. Stock for next week is going to be Grindr. Like we mentioned, the LGBTQ app. As a reminder, housekeeping items as we wrap up. If you're a regular listener to the Not So Deep Dive episodes, as we referenced throughout the episode on all of our episodes, you should subscribe to our free newsletter and get our show note and chart companion for each episode. The link is in the show notes, or you can search Chit Chat Money on Substack. If you like watching these episodes, you can do so on either YouTube or Spotify. Third, if you enjoy the show, give us a review on Spotify or Apple Podcast. We are not financial advisors. Anything we say on the show is not formal advice or recommendation. We are general partners at Arch Capital, and clients may hold securities discussed in this podcast. Thank you all for listening. We'll see you next time.